Good evening, ladies and gentlemen. This is Clueless Day Trading. Frank, it's approximately 7:41 p.m. I am truly sorry about the slight delay. Um, Tonight is the 10th of October, 2017. Approximately, like I said, 7:41 p.m. Eastern Standard Time. This is a free webinar, strategic webinar, as I'd like to call it. It is strategic based on all the conditions in the market. The session will be recorded and uploaded to the YouTube channel, the Clueless Day Trading YouTube channel. Highly suggested that all of you have subscribed to it and just put in your email so you're notified on any of the free webinars that I put out there. And for advanced coaching students, ACS students, advanced coaching students, of course, you're notified at the time that those sessions are conducted and the link is shared. Do mention that to all your friends and anyone else who's interested in the market, whether they're trading or not trading, whether they're investing, if they want to learn the realities of US financial markets. I believe that a significant amount of my videos, or videocasts as I call them, are extremely informational and helpful. So feel free to pass on the word so they can be subscribed to for free without having to be a member at Clueless Day Trading. Now, these are only for the free webinars that I put out there. Full disclosure, this is purely for financial education and not for any solicitation or advice. So let me begin. First of all, thank you. We have some new members here. We have Tom. We have Parvez, and then we have some very loyal members from a while ago. Dano, my man, book him, Dano. We have Mike. We have Shawnee, and we have Zubair. So all in attendance. Great crowd, and I hope to make this next 45 minutes to an hour very productive and hopefully constructive for people to make some money, because that's what we're trying to do. Simple as that. So a couple of very simple comments about the market. This is the market going back to the 4th of October, which was a Wednesday, so approximately a week ago, and that's where this chart starts, and these lines begin. Of course, they begin all the way down here, but I'm just showing you from a relevant reference point. And these charts are extremely, extremely important because these are the ones that dictate what's happening on the front end on the stocks that we're trading. So as you can clearly see, and the first comment I'm going to make, which all of you know, this ain't grandpa's market, right? And I love my grandpa. He died years ago. These are extremely volatile markets within tight ranges. In other words, even a 30 to 40% move. 30 to 40% move. I mean, that's like Armageddon. 30 to 40 point move on the Dow Jones Industrial Average can cause severe volatility. So anybody that you hear out there, and we know that the financial media and a lot of the gurus who show up there and stuff, there's no volatility. The VIX is stuck at between 9 and 10. Well, it almost went to 11, and we made some good money on it based on my alerts on the VIX calls. The fact remains that this is not a straight line market. Now, second point, lots of traders, great traders from years ago, and even the recent ones, refuse to accept the fact that there is volatility in the market. They just think that if you buy something and then 5 days later or 2 days later, whatever, it's just going to go up in a straight line. It doesn't do that. Yes, they'll go up once you get a confirmation on different technical signals and technical alerts and stuff that I put out. But along the way, they're going to do this. But as long as the trend is on the upside, you are going to go from $1, I'm talking about options trading here, to $4, which is not 400% of your profits. Mathematically, that's 300% on your ROI. And we have done this consecutively, consistently on multiple stocks, whether it be Alibaba, whether it be Nvidia, whether it be Tesla, whether it be Priceline, which is just out of control, whether it be Amazon. I'm talking about the high beta momentum stocks, not just the swing ones, which also do great, like United Airlines. Alerted between $57 and $59, the stock hit 68 plus today. Actually went to 69, 62. I lost track because I had these lot of calls. And anybody who sat on them and took staggered profits along the way consistently made 200% plus on their money. I'm talking 40-cent calls, which go up to $2. I'm not talking about option contracts costing $4, $6, $7. I'm talking 40 cents, 50 cents. Anyway, to get to it, to get from point A to point Z requires pure technical and tactical fortitude. Now, what does that mean? It's a big word, right? I'm kind of educated kind of guy, right? Just kidding. So the bottom line is it requires that you have a keen eye on the charts that I'm posting, the tactical charts, whether it be on the markets as you are seeing, whether it be on the individual stocks, which I kind of drew on a back of the napkin kind of thing, right now. Calls going from $1, from $1 to $4, or 40 cents in the case of United Airlines, originally alerted around 40, 50 cents, going to $4. They did. They're at 5.35. Okay, so 40 cents to $4, gentlemen, is 900%. So how does somebody hold on to something for a 900% gain, which they have never, ever made in their lives or dreamt of? Well, start dreaming big. The only way you can start dreaming big is not by listening to Tony Robbins or Oprah or some other big shot motivational speaker. You do that by looking at charts. Not trying to understand them that much. And because I put on the arrows, I show the levels and where it's going to go, and it's going to get there. Because I back tested a significant amount of my alerts. And I would say good solid, I'm not kidding, 90% of them get to where I'm showing they're going to go to. Specifically the ones which are coming off some deep, deep tactical bottoms and then breaking out and moving higher. But they're not going straight like this. They're going up on the second day. They're pulling back. They're kind of like zigzagging. That's the nature of the market. It's called the big V. What's called in the business vol, not volume, volatility. Okay, volatility. So my question, my suggestion to all of you, because I'm only here to help. Okay, I'm just a faster messenger on the markets than most of you out there. Is embrace volatility. Stop being scared of it all the time. I know I get a little jingoistic at times, and I scream and shout USA rules and our markets are the best. Our markets are the best. We have the most deepest liquidity, meaning like from a trading perspective, there's always for every seller, there's a buyer on the other side. We have a fluid market, the US financial markets. We're not rigged like, I'll say it, the Chinese markets or the Indian markets or the Dubai markets and the Saudi markets. They're all rigged. You think the rich only make money in the United States? Well, I know a lot of poor folks who have gotten very rich by trading. I'm not a multimillionaire. or maybe I wasn't. But the point is that I didn't start off with like $1 million in the bank saying, okay, I'm going to trade my way to riches. I took a bunch of money, I lost a bunch, I moved on, and I made a lot. And along the way, I lost a bunch too, but I always make much more than what I lose. So this is the reality of the market that's out there. So what's the next point? The next point is, or the next thing is called passion. Now, a lot of you are trading on the side. You don't need the money. It's kind of passive stuff, and passion equals hunger. You don't need to be a hungry wolf on Wall Street type of garbage. I hate those type of guys. People who, excuse my French, like we say in New York, screw other people to make money. We're not screwing anybody. All we want to do is decimate the algos and the automated programs that hit the market, the algorithmic high frequency trading programs that hit the market, and make money off them. Not mom and pop, not some old lady sitting out there. Wolf of Wall Street supposedly is what inspires people. Garbage. And that idiot is now going around the talk circuit and making millions. He'll probably listen to this video and try to sue me. Good luck. That's low morality. That's no conscience. That's garbage. But you have to have passion. Now, what does passion mean? Passion doesn't mean you have to stay up till 3 in the morning, like looking at charts and looking at that and looking at Pluto trading charts and why Priceline went up. How much did Priceline go up by? Does anyone even remember? It's from 1805 when we alerted, 1805, 1810. It went to 1943. That's 140 points higher. So, no, it doesn't mean that. Passion means that you have the desire to really make some money, whatever you're trading with. Look, this is my living. I am truly passionate. I am truly passionate. I am grateful for every single dollar that I earn, every single penny that I earn. I'm grateful for every single penny that I spend for my family and for myself. And I thank God for everything. And I mean, I thank God for everything that we have. So the point is that if you don't have the passion to really make some money, because this is your hard-earned money, then don't trade. Don't be a trader. Buy a couple of my long-term stocks and just sit on there. Don't worry about what the market does in the meantime, because the U.S. markets are going higher. Foreign markets in general are up right now about 100 basis points. That's about 10 percentage points higher than we are in the U.S. What, they're just greater than us? Yeah, a lot of smart countries out there. I'm not going to go out there and say we're the smartest. We are a bunch of idiots in many cases. But they are, because they're emerging markets, and a significant amount of U.S. fund managers have put money in foreign markets, and they are and they've done very well. And they are faster growing. Anybody remember when you were a teenager? Maybe some of you do. You know, you have a growth spurt. Well, emerging markets have growth spurts. We had growth spurts. But as you get older and more mature, you don't get growth spurts. You just want to be like able to walk and kind of run a couple of miles, right? While you're jogging. So that's the United States of America right now. We're never going to be the sprinter. We're not going to be the 7% grower. You guys know that. Doesn't matter what the politicians say, whether it's Trump or somebody else. Oh, we're going to grow at 4, 5%. But complete hogwash. We are not going to grow at 5, 4, and 5%, because if you're kind of mathematically orientated, it's called the law of large numbers. If Amazon today, which is a $986 stock, and let me just pull up Amazon here. It's called the law of large numbers. Please, remember that. which is a great looking chart, tactical chart, which is at 986 right now, goes up 5%. Okay. I mean, I know the ballpark number, but I want to give you the actual number. It means it goes up to 1,035 right there from here, somewhere here, big time. So that means a $986 stock goes up by 50 bucks. So is Amazon going to go up 50 bucks in one day? Yeah, it can. Can somebody tell me how Amazon can go up 50 bucks in one day? Please give it a quick thought and tell me. I've mentioned this in one of my older video casts, how one of these big cap $1,000 stocks can do that. Take a guess. Please. Just try it. Mike? More buyers than seller. That's another. Mike, man, you should be like an establishment politician. I mean, that is a beautifully simple answer. No. Parvez. How can Amazon, I'm going to ask a question, and this is the reality of the market. How can Amazon in one frigging day go up 50 bucks?
Great earnings.
Nope. Yeah, yes. That's a good answer. That's Corey. Corey, you're right. We've been there with Amazon being up 60, 70, right? We've been there. But aside from earnings, I'm looking for a different type of answer. But that's the correct answer. Merger acquisition news. Parvez, another very simple answer. Who is Amazon going to merge with? They are the king of the hill. It's like asking Donald Trump to merge with somebody, or the Saudi king, who is our our president Donald Trump's best friend, to merge with somebody. No, wrong answer.
Volatility?
No. Parvez is actually on the right track, kinda. It's not merger and acquisition, but it is a financial engineering move.
Repatriation of money back to the U.S.
No. That'll move up Amazon by about 5% and most other stocks by 5%. That's one of the reasons. Mike says category domination, get into pharma distribution. That's a very smart answer. Yeah. Tom, any idea? I'm looking at it from a purely trading perspective. Hey, somebody's talking. Who is that?
That's Tom. I said a reverse stock split would do it, but that would never happen.
Yeah, but it's not a reverse stock split. It's stock split. A reverse stock split is done by pure nonsensical companies who want to take their $2 stock up to $10. But you have the right answer. A stock split. Look, I've been on Wall Street. Well, I was on Wall Street since 1996 onwards. I saw stock splits on big companies and Apple. Does anyone remember how many times Apple split? I lose track. I think, yeah, like three
or four times.
Thank you very much. Yep. Amazon split, I think, like 3 times already. So, or more. I'm like losing track on that. But yes, you guys have the right answer. If they come out today, tomorrow, and say we are going to distribute 1 share for Amazon retail, right? Because they have different segments of the business. That's what it is. 1 retail, 1 share for AWS, which is Amazon Web Services, and 1 share for whatever Amazon is doing. Oh yeah, they're doing not just AI, because Amazon is one of the leaders of AI, artificial intelligence. What we know is Alexa. I bought the first Alexa, by the way. When I'm Amazon Prime members for years, so they gave it to me like for 40 bucks. It's still gathering dust in one corner of the room. Because I don't want Alexa to wake up my dogs and cats, right? Just kidding. Seriously. So if Amazon goes and says, okay, we're segmenting these divisions, this is real Wall Street. And believe me, the plans are already there. They can just say, do it. Doesn't matter what some dogmatic bears think. Doesn't matter what China thinks. Doesn't matter what Russia thinks. Doesn't matter what the Saudis think. We can do our own financial engineering. And the segmentation of three parts of the business, what we say on Wall Street, unlocks huge, huge intrinsic value of each segment. Okay? So Amazon stock can go up $50 to $100 in minutes. Trust me when I tell you that, because I've seen it. So anybody who says the bull market is dead is smoking, hopefully not crack, but hopefully not smoking any type of like heavy duty weed from Colorado, because they have no frigging idea what they're talking about. Let's look at another stock. Actually, let me just go back to it and just finish my couple of quick comments. Then we're going to go through and look at stock. So talking about volatility, I'm angry. Corey always jokes around with me, and Corey's a good friend of mine. Well, golf man, Corey. He's, jokes around with me. Something. Are you scared? I love that comment, by the way, golf. Okay. So, am I scared? Yeah, I'm scared sometimes. I totally am. I have some reasonably good positions in multiple diverse stocks and alerts that I'm putting out. And yeah, I have multiple contracts in each. I don't like my account getting swayed around like it's in the middle of whatever, middle of a storm in the Caribbean. Yeah, I am scared sometimes. But am I panicky? Never. Because I realized one thing a long time ago in life and in trading. What's the point of panic if I know what is going to help keep me alive, which is what my charts do? That's what I try to help you guys every single day. My charts are not designed for perfection. I'm not God. I don't control the markets, but they are designed to minimize your fear level. Because the markets are so mathematical, so robotic, a bunch of geeks sitting there, American, Russian, Chinese, Indian, those are the best minds, by the way, when it comes to real mathematical geniuses. I'm telling you straight out, and not to offend anyone because I'm kind of politically incorrect. You don't hear about Mexican quants, okay? Great businessmen, yeah. Great drug dealers, yes, but you don't hear about a guy like, with a South Indian name that long, or a Russian name you can't pronounce, or a Chinese name you can't pronounce, or all our good, American guys, that names you can pronounce. Those are the guys who are running those algos. That's a fact. It's not a politically incorrect statement. So the point is, because they're running it, they don't understand these dynamics about predictive fundamental theory and what Catalonia is going to do and this and that. They're just looking at structures, numbers, and that's the reason why I can draw my charts. Do you guys understand that part? Yes or no?
Yes.
Absolutely. It's really as simple as that. And they're not geniuses. They're not making money every single day. They're getting whipsawed around too, because there are many, many different styles of quantitative trading or algo HFT trading. So what I try to do for myself, which I share with all my members, clear and simple, is detect those levels where they are going to move on, where their program is going to kick in, what we call those big buy programs or the sell programs, which, by the way, to this morning was a fake out, because it looked like it was going to hit the upper end of the range, but it didn't. It sold off. Call it Catalonia, the Spanish thing. That definitely was a reason. But look at the pattern. Look at the pattern. Respect volatility. It is not random. Robert Malkiel wrote a book many, many years ago, which many of you might know, called A Random Walk Through Wall Street. You know why he wrote that book? Because human emotions control Wall Street at that time. I worked on Wall Street for what, 14 plus years, as I love, saying. Well, not love saying, I loved it. It right next to the New York Stock Exchange. But there were hundreds of people in the New York Stock Exchange. It's a huge, beautiful hall. By the time I left in 2010, there was 1/5 of people running around, all computers. It's no longer the random walk. It's a structured walk. That's what I try to deliver to you guys. That's what I try to learn every day. That's what I try to trade every day. And I try to be as robotic as possible when I'm looking at the markets on my, multiple screens, and as emotionless as possible. Does it make me happy when my trades go the other way? Absolutely not. Does it make me a calculated warrior when to buy, like Tesla? Because every day there's an opportunity to make some serious money. Absolutely. That's what my charts are all about. And I want you guys to understand that. Saying all that, look at the structure. Does this look almost identical? Yes or no?
Yes.
Yeah. Even a 5-year-old will look at that and say, Daddy, and my one's grown up now. He's going to be 19 in November. I wish he was 5 again. I used to sit him on my lap and he used to look at well, at that time I didn't have like multiple monitors, it was just like 2 monitors. When I came back from work, I'd be looking at things and I used to call him the little Google kid because he would just type in things and find out things. No wonder he's a little whiz kid now, whiz young man. And he can detect the pattern. So if this pattern is this, I know what the upside and downside is based on these mathematical patterns. So here's your downside. Here's your upside. Here's the channels. That's why I draw these channels. It can climb these channels. Now, in the old days, like I want to remind everyone, these things took multiple days. Now it happens within multiple hours. So even if it goes here, there's a high probability. And I'm not even showing the internals down here, which are the stochastics. I'm just showing you like the exact chart patterns, which you can trade on your own with small amounts of money. Forget small amounts of money. Trade with whatever you want to trade with. We're always thinking small. We always use the word small amounts of money. Do whatever you want. As long as you are doing it, just do it. Like Phil Knight said of Nike, just do it. Built an empire. Just do it. Our country was built on just doing it, not sitting around SOA, which as you know what means. Well, Tom might know, like, excuse my French, like sitting on your ass. Or MOHTR, monkey on a hot tin roof, jumping around every little tick. Now, just do it. Put $50 in. Put $100 in. I'm not going to tell you how much you got to put in. One of our old members today said, should I sell this? And I said, look at my charts and I'm putting out whether I'm long S&P or not. I'm long S&P. I'm not going to advise anybody because I'm not in advisory capacity. So bottom line is, my estimation based on this is that it's going to do this, or it's going to basically zag higher, zig down, boom, boom, boom. And by the time all is said and done, we reach the upper end of the channel, which is approximately around the 2563 level, 2364 on the E-minis. Can somebody tell me what that means on S&P 500? If it's 2564, because you guys need to know this, because I show a lot of these E-mini futures, right? So 2564 on the E-minis or the ES is roughly how much on the S&P 500? Come on, guys, please step up.
Add 4 or 5.
Thank you very much, sir. Thank you, Golf. So add 405, so let's call it 2570. That's where the S&P is going to go. Now, the reason golf is going to actually believe me is because he's seen it so many times, and it's just golf, Shawnee included. He's seen it happen so many times when I'm talking about these numbers, and one way or the other we get there within a reasonable time frame. And I'm not talking about days and days and days. I'm talking about weeks and weeks and weeks. I'm talking couple of days that they know that it's going to do it. The problem we all run into is how you're going to manage your trades. If you put too much in, you're going to freak out because you're going to zigzag the way up. Now, as an active trader, you can play the zigzags. That's fine. You can do that. But at least, even if we don't get up there, we will get to the upper end of this channel, which is exactly where the big resistance comes in. I don't make this up. I'm just showing you. And intermediate, there are these intermediate channels which are already in play. So I'm not saying you have to be glued to the screen all the time, but if you can certainly know those levels where the markets are going to do what they're going to do. Now, is it possible that it's just going to do this? Absolutely it can, but those are black swan events, which are unquantifiable events, which I can quantify based on technical analysis. If there is a major terrorist attack in the middle of New York tomorrow, which I never want to happen, my son goes to school in New York, and I'm a survivor of 9/11, obviously the markets are going to drop 500 points in a flash or more. But that's a black swan event. We can't quantify it, so it's an outlier. But I'm basing it on what we are seeing here. So going back to the passion and hunger thing, you got to have a desire to learn. Like I always say, buy one contract. No, really do. I mean, if you want to get to know a stock, make friends with him or her. Okay? Buy one contract, buy one share. So you get to track it. So it's not a stranger to you. I have found so many great trades by playing earnings trades. I never knew the stocks. I mean, I knew the stocks, I never traded them. One of the best ones that comes to mind, which golf and other people remember, is a Chinese stock, HTHT. Never knew about it. China Lodging? China Lodging. Still have a few shares left in it. I don't know why the heck I don't play options on that, because options are kind of weird. China Lodging was recommended. Oh, this is the chart. I didn't even draw this. It was there from way back. We played the earnings, if you remember. China Lodging. Not many people did it. That's okay. So the earnings was sometime in July. Somewhere in this 70-80 range. Boom. It racked up. And this was a chart I had drawn at that time. It's gone well beyond that. It's the price line of China when it comes to hotel bookings. And the company is called China Lodging. No one even talks about it. You ever hear China Lodging from Michelle Caruso Cabrera, blah, 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 whatever her name is? On CNBC? No. It's an institutional stock. Like Intuitive Surgical, which unfortunately I'm not in. Can be in everything, but seriously, I'm a bummer because I have a chart on ISRG from way back. Oh my lord, ISRG split? Does anyone know this? Oh, guys, Golf, did you know this?
No, sir.
I just looked at it on my other screen, Golf, and ISRG $356. That means they split 3 for 1. We are on it again because it's just too much to buy those ISRG options at $17. You remember that, Golf, right? It was just like,
Yes.
I mean, I used to play it on earnings. I'd buy like one contract, maybe two, and it would be like a double after earnings. Yeah, whoopee, it's great, But how about like a triple. You can't do that on a law of large numbers. I just looked at this. Intuitive Surgical is a $356 stock. I love it. Guys, back on the hit list starting tomorrow. 356 bucks. Options are options are priced now. The premiums are 1/3 the cost. We can all afford it. We can go for it. All right. So basically, one second. Our good friend Parvez, he's a great new member. I want you all guys to interact with him. He's actually a futures trader, so he really likes all the charts and stuff that we do. Very talented guy. Anyway, he left. He said, whatever appointment to get to. Okay. So bottom line is that here's another stock. Now it's my fault. I didn't keep on pushing it, but stocks like Mercado Libre, right? The big South American Google. And even AutoZone, even though it's kind of like down 6, 7 on the charts, it doesn't show much on individual options. Obviously, it affects us. Those stocks they have a lot of room to move. So the thing is that anyway. So here's a stock that when I look at it weekly, this was my chart, by the way, drawn from all the way back in July, not July last year. I wish I was in it July last year. I didn't even know what the heck the company was. I'm talking the July period this year. Look at that, from 74, 140, and there is no signs of a let up. So this was a level that we actually played it, which was in the $74 level. And look at this. These are big, huge money makers, guys. Big, huge money makers. Anyway, let's look at ISRG for example. I'll look at the technicals in a minute. Oh boy, the stock was. Go ahead.
Hey, Clue. You know, on that last chart like you had. When you finally get to the top and it's never hit. It's at a 52 arc or all-time high. Pretty soon there's no supply up there. So really, those things can just keep running, right? There's nothing to stop it.
Yes. So Golf just brought up a absolutely amazing point, which is I trade a lot of these high beta momentum stocks off new highs too, right? Like Nvidia. Okay, the stock fell a little bit. There is no supply out there. Now, what Golf said, guys, listen very carefully, because what that gentleman just told you guys, new highs make new highs. Now, what does there's no supply out there mean? And Golf, don't answer. I want people to learn. That's the reason, the whole purpose of me spending time doing this. So, Mike, what does no supply up there mean? This has to do with, I have mentioned it many, many times about supply and demand zones in multiple videos. But I want to stress this point because it's a terrific point. Not terrific. It's a big actionable money point that that Golf brought out here, Corey. Okay, what does no supply mean?
No sellers.
Correct. And what is a supply or demand point on this chart? This is a chart of Nvidia. You truly think this stock is not going to go to 200 to 220 bucks? Does anyone look at this chart and say, that's it, I'm putting in 20% or 30% of my trading bucks into this stock? I'm not telling anybody what to do. I'm pretty heavy into Nvidia from all the way down. The kids account from all the way down here in this zone. On trading accounts, staggered profits all along the way. So let me start one by one. But let me finish one last thing about my behavioral game theory comments. Do read the article that I posted on out there. Guys, institutional money managers, they are the big kahunas which control the market. Capitalism is about big money. Capitalism is not about poor people controlling countries. Okay? That's it. That's life. Let's face facts. Billionaires got there, and this is in our great nation, Most billionaires were not handed down. That was the case with the robber barons and stuff till from the 40s down to the 50s. But after that, look at the billionaires that we have, all self-made through intellect, not handed down gentry. So let's respect what we do. Big money talks, and like we say in New York, don't take me the wrong way, shit walks. Okay? Respect big money. Doesn't mean you have to idolize money, but respect capitalism. We're not socialists. We're not communists. We don't look down on everybody who's got a lot of money. If you want to do that, then please move to a different country, like North Korea. And even the big leaders have like billions of dollars in the bank while they're starving their people, right? So why do I say that? Follow the money. That's it. Not this like, oh, the rich and they're not just stealing from each other. Crap, cut all that crap out. This is the most egalitarian country that I've seen. And I've traveled through the world extensively. We are the most egalitarian. You don't know the word, what it is? Google it. We are the most fair, benevolent capitalist country you will ever meet. Everybody out there, the third world countries which are growing in leaps and bounds, India, China, Vietnam, Cambodia, Laos, Myanmar, there are millionaires being produced. Bangladesh, millionaires being produced. We think they're like all dirt poor. Yeah, the majority is dirt poor. Now, I'll relate to why this is important to trading in a second. The majority is dirt poor. They have low labor costs. They can build things on the cheap like we were 100 years ago. Remember back in the days, everything was said made in Hong Kong, made in Taiwan. Anyone remember that? Like even till the 80s, everything was like made in Hong Kong, made in Taiwan, made in China. Well, guess what? Every time you flip around the Ralph Lauren jacket, a $400 fleece jacket for skiing jacket, it says made in Bangladesh, Vietnam, Cambodia. It's called supply chain labor. Where labor is cheap, money's going to go. You want to build an iPhone here? Great. You want to build every single t-shirt, underwear that you buy out there at Walmart or TJ Maxx or wherever? You ready to pay $40 for it? Great. Build. Why don't you just have it manufactured in New York City or Minneapolis or Chicago? You tell me how much it's going to cost. That's economics. Now, saying all that, supply and demand. Believe in capitalism, all right? Good capitalism, benevolent capitalism. Stop being a hater. How does it relate to trading? As the markets move higher, nobody wants to believe that it can go higher. And so what it means is they're always thinking small. They're never thinking big. And we're not thinking big, as my good friend Golf just pointed out. No resistance higher. $5 trillion worth of cash sitting on the sidelines because mom and pop think that Wall Street is just like a bunch of scammers and this whole thing is not real and US companies are not really making money. It's all like fake news. Garbage. US companies are making a lot of money. And as the global economy picks up, they're going to make more money because we are the world's largest supplier of stuff overseas. And the Trump team, the economic team, which I think is one of the finest that I've seen so far, are going to renegotiate certain things in between faux pas here and there, okay? And they're going to set lots of good deals. They're not going to put tariffs on like stuff coming in from China and Taiwan and Hong Kong just like that. They're going to put pressure. It's mostly verbal pressure that good old Donald likes to do. That's what we in New York like to do. We like to put verbal pressure like I do with you guys. Okay, how about that? It's all to help. So, saying all that, let me not deviate from the point. You look at a chart like this. How can you not? I mean, seriously. So somebody tell me, where are the supply points? Well, I actually forget it. We don't have all night. So these are the demand points where the buyers come in, right? So I structure the chart so you know where the demand points are. I even put nice fancy arrows. So these are the demand points where the buyers are in. Even after a big fat drop, that drop was worth almost 20 points. Doesn't mean much. Does it mean any much to Tesla? Whether it's a 1 day or 1 week drop, as long as you structure the charts, that's my job to do. Your job is to act on it. So saying all that, here are the supply points. Big supply, upper end of the scale. But as Golf pointed out, as the stock moves higher and makes new highs, there is no, what was the word that you used, Golf?
No supply up there.
There is no supply up here. Now, what does that mean in simple terms? Can somebody explain to me what no supply up there means? And not Golf. Simple terms, please. Because this is so important to momentum trading and to market trading. As we're making new highs, 2550, 2560, they're like, oh, market's too high. Market's too high based on what? We could go to 2570, which is only 120 points away from here. There is no supply out there. So 1% at a time. Shawnee, what do you think no supply out there means? As Golf very strategically pointed out. And thank you for that.
Fear in the market, no buyers.
Just the opposite. There are no sellers at that point because the new buyers who are coming in are basically going to drive it higher and nobody bought it here. Remember, what is a resistance? And this is something I covered a long time ago, but I'll cover it again. Here is support, here is resistance. What does it mean from an emotional standpoint? If a stock goes up, hits resistance, pulls back to support, goes up against the resistance, maybe dilly-dallies around, and then breaks out, here is the no supply zone. Now, this is very critical. So I'm going to explain to everybody, and everybody's going to understand finally what resistance and support means. But I'm going to ask somebody to volunteer. So here's resistance. What does resistance actually mean in terms of, let's say this is 0.1, 0.2, 3, 4, 5, and then the no supply zone at 6. So, Shawnee, what do you think resistance is all about? Like, why is a stock at resistance? Why do sellers just come in at resistance?
Ooh, pivot points.
Think simple. Sue, what do you think it is? Miss Sue, are you there? I guess Sue doesn't want to speak to me. That's fine. Tom, what do you think? This is the key basic principle, the underlying fundamentals about trading. So why is a resistance called a resistance? You see, none of us ever think like this. But go ahead. What?
They bought at support and they want to sell at resistance to make profit.
Now, where did that resistance come from? You're saying the right thing, but just flip the mirror, Tom. Because somewhere along the line, the stock hit a level where it sold off hard, right? Yes?
Yes.
Exactly. So here's the answer. I'm not going to, I'm going to explain it very clearly. It's so simple, but like they say, common sense is an unbelievable scarcity in life. So, and that applies to me too. My wife tells me that, when it comes to real life, my common sense is a little bit low. I'm like, really? I mean, come on. I think I'm very cool and stuff. And she's like, no. My wife's a lot smarter than me, by the way. And she does not even give a crap about trading. All right. So here we go. If a stock is coming up and it hits a certain level, right? Let's say the stock was down here and it never touched this level. So it's a new territory and all of a sudden the big sellers come in. I mean, when it hits it there, everybody gets excited, not here. People get excited here. So right when it hit that level, there's a lot of buyers here. There are not many buyers, generally speaking, off tactical bottoms. which I specialize in, right? Because those are the most difficult bottoms to buy, whether it's Tesla, whether it's Amazon at 931 or Amazon recently at 960 or whatever the case may be. I'm giving you real life examples. So they get excited, right? Like, oh my God, well, in the old days, that used to be the case. Hey, Johnny told me the stock's really hot. Let's get in there. That's the way it used to be, right? It's still kind of like that. We are not at that stage yet. That's the reason why the markets are still going higher. We're not in that euphoric, like, hey, let's talk about stocks over a couple of nice beers, So bottom line is most retail traders or the most of the so-called mutual fund money, whatever, get excited at these levels. So they're like, this is a breakout. It's a breakout. It's going to go. It's going to go. So they buy all around here. Now listen carefully. The professional traders, the so-called smart money, the algos in this case, that is the kind of the smart money now, they start selling really hard at that level. So all of a sudden you bought something here at $5 and you went up to maybe 550. You didn't even get to 6 and they start slamming it. Now, as an investor, whatever, you're like, oh boy, what am I going to do? You think you just rapidly turn around and sell? No. You're like, no, I'm going to hold on. This thing's going to bounce. That's exactly how it works. And you see it plummet down, or maybe you sell a little bit, but you hold the rest. Because what's the first thing a retail investor, a human investor thinks? Oh, it's going to bounce. He has no idea about technicals, no idea about clueless A trading, no idea about stochastics, all that stuff. He's like, no, it's going to bounce. It's a good company. Of course it's going to bounce. Nothing's wrong with it. Stock goes all the way down to 2. You're like, holy crap, I don't believe this. I sold a bit here at around 3, and now the frigging thing is at 2. I don't believe this. My wife's killing me, my dog's killing me, my cats are killing me, whatever the case may be. This is crazy. Do you think I'm kidding around? You see, I'm not Kramer. I'm the real deal. This is the way it works. So they're like, I'm not going to sell at 2. It can't go below 2. In most cases, probably doesn't go below 2 if it's a real company. Because there is, after all, the intrinsic value in the company after a multiple compression. In other words, when the PE, when there is sort of all the capitulation and the sellers get out, blah, blah, blah. If it's a real company, it's going to have its intrinsic value. That's in there. Now, go another 3 weeks, and the stock, you haven't bought a single stock here at 2 because you just can't, you're like, I just want to get out with my money even, right? Am I right? Yes or no? Guys, need some response.
Yes.
Yeah, I mean, this happens with options too. It's happened with me. On options, we're like, I'm even. I'm going up like another 20%. I'm like, okay, I'm taking a bunch of out, and then what happens in the next 20 minutes? It goes up another 40%. It happened with me. I sold a bunch of Melly, and then after exactly 15 minutes, the stock, the options went up another 40%. I still have a small balance, but what about the larger balance that I sold at a minor profit based on the fact that I was even, and even though my charts were showing good? I'm human because I had other stuff running, so I just wanted to, sort of not be spread out too much. How many times has it happened to all of you that you got even and slightly higher and you got out of the trade? Yes or no?
A bunch.
Lots.
A bunch, a lots. So we are addressing a fundamental flaw in our thinking. Look, I'm flawed too, but I'm far less flawed, or I make far less mistakes than a lot of you out there. Because we are, after all, dealing with real money. And last I checked, the beautiful trees in my neighborhood right here on the waterfront are not, every time I'm walking my dogs, they're not like showering me on a fall autumn afternoon with $100 bills. So we care about money. So let's get back to this point. So here's a $2 stock that goes up. You're like, wow, it's going up. Great. Do you have the courage to buy it? Emotional traders don't. Tactical traders do. Tactical traders like us would be jamming on it because we see the momentum coming through. And I'm not showing you some complicated chart. I'm showing you the reality of the simpler stuff. Okay? So you don't buy. it goes up to 2, and then it goes up to 3. You're like, wow, I don't believe this. This is great. First thing that goes to your head, I should never have sold down here. This is great. This company is real. The minute it hits 3, it goes to 3.20. What do?
Dump it.
Dump it. That is called resistance. It's emotional resistance. The stock, and this happens all the time in these type of markets, breaks out, and then just goes nuts. That is in the no supply zone, as my good friend Golf says. And it goes to 6, it goes to 7, and who knows, it probably goes to 8. So the guys who were bought around these levels, they're all out. And there's a little bit of fluctuation or retracement, as I call it. Because normally when something goes like this, what happens? They create a consolidation channel. How many times have I showed that on my charts? What is a consolidation channel? Profit taking. Smart guys or smart services like ours, we generally buy at these levels. We actually buy at these levels at the point of maximum anxiety based on my type of work that I do. But let's say you buy at these levels. So good. You have nice profits. You want to take some profits down. Then it becomes a consolidation channel. Profit taking. The people who bought it up here are like, wow, I just got my money back. Let me take it back so I don't get beaten by my wife, husband, partner, whatever it is, my dog. They're like, okay, that's it. I got my money back. I'll think about it twice. Okay, so consolidation channel happens. What generally happens after a move like that? We have seen it zillions of times. You get a bull flag move. So resistance is all about recouping your previous profits. And once it breaks out on this move, the new buyers who come in, big momentum traders, big guys like us, we buy momentum. This is one style of trading, by the way, not just the depressed, distressed stocks that we buy, but one style of trading. So you buy it here relates to no supply. What does no supply mean? There are no sellers out there because nobody had a chance to buy it here. Why? Because it was never there. So if the stock goes up to 8 and broke out of 5 or 3, I said 3 before. No, I said 5 before, 5. Okay? $5. Well, nobody bought it at 8 because it wasn't there. Do you guys understand that part? Yes? Very simple, very important for trading. So the no supply zone, you can make a crap load of money really quick. The no supply zone of NVIDIA is right above its, right above when it breaks out over this. It had tested. Now remember one thing, just what I said right now. It hit the previous level, right? Which was approximately around 190, 179. Right there. So obviously, this is a weekly chart, so you don't even see it. But on the daily chart, you see a little pullback. Didn't it pull back from being up this morning? And we were long NVIDIA for a bunch of days. No complaints on that. It hit 192.95. It went to 187.26. That's, like they say, that's a $5 move. More than that. And it ended the day at 188.63. You can't see that on this. But intraday, if you did this, that's what you saw. Do you see this, guys? Right there. So that was the resistance you get. And immediately, the mom and pop who basically bought it at the highs because NVIDIA is a hot stock and Kramer's saying, I named my dog NVIDIA, blah, blah, blah. That's what he keeps on saying, right? And so they all bought at the highs, the previous highs, which was not too long ago. Which was when? Look at the date up here. Which was the 18th of September. So the people who got all excited, never bought the tactical lows, they got all bought it at this zone. Now they're even. Now they went up a little bit. It's like the $3 stock going up to $3.20. Guess what? They're like, this is great. I just got a bunch of my money back. I'm out of Dodge. That's why the selling happened. Nothing changed. Now stay with me for 3 minutes. I'll be back. Look at this chart carefully. I want you guys to look at something else, which is the simplest way of determining that nothing changed. Okay? This was all this resistance selling. Right there, those volume bars. Right there. Didn't change anything about the company. There are multiple things in here supporting it. There are multiple things here telling you the stock's going higher. Give me 3 minutes. Look at this, and I'm going to come back and ask 2 questions. All right, guys, I'm back. So you guys took a good look at it. So I'm gonna relate this chart to actual options trade management, which is the way I do it. It works, and there are great option traders out there who do it far better. But hey, it works for me. It's fine with me. So there we go. So bottom line is, we understand the concept of why the stock sold. Why didn't it just continue its rise over 194, which was at look at the time below, at 7 a.m. this morning, by the way, pre-market. Pre-market traders, which you can trade pre-market too. You know that. After 8 o'clock, that's the stock basically 9 o'clock was there. It started to go down. And the minute the stock opened, which was 9:30, Gulf is actually getting the drift. You sell it. Now, if you sold it at the highs yesterday, you missed out on the move today. But at the same time, you don't have to sell everything. You can buy it back during the day. And I was alerting NVIDIA to buy, which the calls we were buying, the 182.5s. And it was a see you later story this morning. So you don't have to be completely out of the position. This is not, remember one thing about algorithmic high frequency trading. This ain't grandpa's market. I love grandma. Grandma passed away a long time too. I miss her. The bottom line is, it ain't grandma market either. This is a market driven by computers. That means there are going to be fluctuations back and forth. Not random, very calculated. So, saying all that, you hit resistance, you pull back, and now we have lots of supports along the way. Now, the NVIDIA news obviously caused the stock to go higher, but more importantly, the charts were already telling us it was going to go higher. I'm still telling you the stock's going to $200. So 12 points on NVIDIA from 188 to 200 is a damn good bunch of money as long as you buy some time. That's why I kept on saying, buy the cheap October 27, 200 calls. So even if they implode, you will have a chance to buy them a little bit cheaper, and you won't lose your whole shirt and your belongings and whatever the case may be, because you're not paying expensive money to buy the 185 or 190 calls. Am I clear on that?
Yes,
When I see a movement,
Yes.
when I see a potential for certain stocks to go higher, because I know the fundamental of NVIDIA. One thing Kramer's right, nobody understands NVIDIA. If I asked you what NVIDIA did, can somebody answer me in one question? Why are they such a hot company that no one cared about 2 years ago? Just one line. Why?
Are they not making the chip for Elon Musk?
Well, that's one reason, but what type of chip are they making for Elon Musk?
Super.
Yeah.
Let me think.
Autonomous car.
Well, yeah, but
I was
you
almost
guys,
there.
yeah, I mean, I know, but what type of chip goes into autonomous car? I'd like one of those chips put into my brain. Well, I'm almost like that almost. What type of chip is it?
AI.
Thank you, Jason Fox. Actually, Jason has an advantage, so he's disqualified. He's a frigging engineer, you know, a guy who worked hard in high school and actually studied. That what makes America great. Jason! Yes, you're right. AI chips. Simple. Artificial intelligence chips. Boy, oh boy, these are hardcore stuff. Not many companies do that. Let me give you another piece of secret advice. Well, not advice. I should never use that word. What do you call? One of the company is a leader in AI. There are two other companies that we trade, which are the leaders in artificial intelligence chips. Take a guess while I tool around with these charts. Take a guess.
AMD and
Not AMD that much. AMD's fine. They're not even close to what.
okay.
Yeah, no, but you're right. AMD's excellent.
And-
Excellent.
And Intel, since they bought Mobileye.
Yes, Intel has always been the legacy player coming back from the back. The two other companies that no one really talks about, which are the biggest artificial intelligence chip makers not chip makers, but they are in like they're thinking so far ahead it's not even funny. Tesla. They have their own AI division. Of course they do. They're frigging cars who drive in their sleep. And guess who else? Amazon. Amazon has an AI division working 24/7 on Earth, on Mars, and wherever the heck Bezos is sending his rockets to. Amazon and Tesla. Amazon, Tesla, and of course there are peripheral companies like Mobileye and all that stuff. But they're leaders on artificial intelligence. Number one, NVIDIA. Number two, I mean, I'm not going to prioritize them, but Amazon and Tesla. That's what makes America great. Telling you this straight out. Nothing excites me more than people using their brains hardcore. And they are. Okay? So let's get back to stock trading. So how do you trade this stock? Well, the way you trade the stock is you look at, of course, the multiple charts and stuff that I put out. The two ways to trade this NVIDIA type of stock, all right? And there's a bunch of them out there, Amazon included. You can buy a swing trade that goes out at least 2 or 3 weeks. So you have ample time. So you don't freak out like, oh my God, the options time value is expiring in 5 days, I'm dead, and that type of stuff. So you buy 2 or 3 weeks out. So October 27th is a pretty good strike date for me. You can buy Novembers. But I don't want to pay up that much premium for November. Because remember, the longer you go out on the date, the higher the premium you got to pay for those calls, right? So October 27 is good for me, end of the month. Now, in between October 27th, between now, middle of the month, you're going to see some severe volatility. And if we need to dump it, we'll dump it. Because if you're going to see severe volatility, it doesn't matter what these beautiful 20-day, 34-day, 50-day, this very nice reset. Look at that, how beautiful that is. The last time it reset like this, the stock was at 180. The last time it reset like this on the full stochastics, the stock was at 177.5. See, these things don't lie. I mean, this is beautiful. Last time it reset like this, the stock was at 170. Remember, these are all correlated derivatives of what's going on the price, right? Stochastics are not running independent of the individual price. And I'm showing you the simplest way of trading these babies. So if the stochastics are deep oversold and getting close to the RSI of 20, which is the relative strength index of 20, old-fashioned way, you got to at least have some position. As long as this is not full-fledged crash. Now, what if NVIDIA comes out? Now, there's risk to these things. What if NVIDIA comes out with an announcement that one of their AI chips they're behind schedule. Like Tesla said 2 days ago. Well, we're behind schedule. I can't even remember the names. What is it? Model X or Model 3? What's the new car coming out? No, the semi-truck. The semi-truck. Okay? Every time I think of the Tesla semi-truck, I think about those Stephen King movies, with the truck barreling down, killing animals, people, and stuff, right? Like, oh my God, it's like a monster thought in my head, It's like this wild truck, like one of those horror movies, driving down. So the semi-trucks are going to be delayed because of his allocation of resources to the Puerto Rican grid, which I think is huge. If he can prove that he can build back the Puerto Rican electrical grid in the next 6 months, I can assure you, my friends, that Tesla stock is going to go to $500 so fast because they're already on an Australian project in a remote part of Australia. I don't know if I actually posted that article a couple of weeks ago, that they have to finish in the next 2 months or he will fork out $100 million back to the government. I have a feeling he's going to get it done. It's some sort of big wind project because it's, I don't know if any of you have been to Australia. I went there a long time ago with my father when he was alive. It's like barren places, like especially near the water, like not just the hinterlands and the interior, Australian outbacks, but the water. It's huge winds, right? Huge coastal reefs. So wind projects out there. He can get this whole town running on just pure wind power. End of story. Let's talk about technicals. So every time it gets oversold, doesn't have to be deep oversold. Deep oversold is below 20. It will have some sort of bounce, and that some sort of bounce can either take us back to the highs or at least take us back from 188 to the previous high, which was here, which is measured at 191. So what does a trader do? One, he believes in the concept of Nvidia, so he buys it 2 or 3 weeks out or 1 or 2 months out. But I'm very cautious about the market, so I don't want to buy 1 or 2 months out yet. Or he buys the weeklies, right? Which have anywhere from 5 to 7 days left in them, and trades the $4 or $5 fluctuations. That generates the trader anywhere from 60 to 80, and on a move like today because we were mainly buyers on Nvidia around these levels, you're talking about 160%. You don't have to be married to it. You can trade it along the way, regardless of what the larger thesis is on the company. Because algos will screw up that larger thesis while the stock, looking at it from a longer term perspective, I'm going back like this, is telling me that one way or the other it wants to go to $214. Both on the internals, looking fantastic, no breakdown. But before it goes to 214, the stock can easily pull back and test the breakout. I mean, this previous breakout, believe it or not, might sound shocking to some of you guys, 173. So 173, somewhere where it closed at 188, is $15. So if you have short-term options, you're going to get killed. You're done. You'll hate Nvidia. You're like, this stock sucks. So you can play it short-term, or it'll come down, test the 20-day moving average. Well, if it goes there, 163, that's a big drop. That's 24 points. And it's still on an uptrend. So, point that I want to make as we end this thing here. There are 2 ways to play high beta momentum stocks. That was the purpose of this thing. You can play it on the swing way, but if you do the swing thing, don't look at prices like nuts, don't look at my tweets like intraday and stuff like that. You look at my swing charts that I post quite a bit, and you stick with the trade. Because the swing trade on Nvidia, believe it or not, does not end till the stock hits 160 and breaks down. Then you can short it all the way down to 120 and make a heck of a lot of money. But look, I'm not a multi-billionaire, and I don't have the patience or the thing to say, I'm going to short this stock till it hits 163. I'm not, what's his name, Chanos, and short Tesla from 100 and the stock's at frigging 355, he's like, I'm still short. I don't have the wherewithal to do that. Like they say, people who are normally short sellers, especially in an intermediate bull market or long-term bull market that we're going through, I call it intermediate bull market. Forget about long-term. Okay, their margin calls will kill them. They will not outlast their margin calls, even though if their thesis is finally right. That's a real short seller. Anyway, so you can swing it, you can day trade it for 3-4 points, but don't necessarily buy it or when it comes to a day trading thing when it gaps open $5-6. All right. I generally like to swing the Nvidia type of stocks. And if it's just during the day, just, I'm positioned all the way down here and the stock basically, which we were, okay, from all these levels, these lines haven't been drawn in front of you. These lines have been drawn for weeks, okay, 160, whatever, and we keep on trading these things higher, then I will sell it if I have a nice profit. So you can do swing. You can do kind of a mix of a day and a swing trade where you basically take some profits off the table, but you leave the 1-3 week out type of calls open, or you can trade it during the day, which is true day trading. There is nothing wrong with day trading. These are maniacal markets. Nothing wrong with that. Even though I'm showing my charts on the market, which I'll finally show, wanting to go higher, we have no guarantees, we have no assurances that we're not going to be down 400 points tomorrow. That's the reason why I always have VIX hedges, which I still do, even though I took a decent sum of profits off those. Those were good for 40% overall, 30 to 40%. But you can't randomly just short the market because you think in your head that it's too overvalued. Because net, you can make a big argument the markets are not overvalued on multiple fronts, and the market is not a homogeneous animal. It is segmented. Energy is not overvalued. Bunch of biotechs are not overvalued. They're way off their 52-week highs. AutoZone is not overvalued, so that doesn't cut it. So you can day or swing trade it, but you have to follow my you have to follow my chart. You want to follow the swing chart, follow these. Now, saying all that, let's take a look quickly at where the S&P 500 is landing up. So I'm going to remove all these things because I always have an eye on the bigger picture, and I trade short term, intermediate term, and of course the swings I leave it alone. This overall is a fantastic technical picture. Number one, let me start from the bottom. What's happening with the full stochastic? Can somebody tell me?
Becoming oversold.
What the heck are you talking about? Where are you seeing oversold? This is the overbought zone. This is the oversold zone. Where are you seeing oversold? I'm just asking.
No, I'm sorry. I'm backwards. It's been a little bit. I'm backwards.
I know.
You're correct.
They're overbought, but add the other word to it. They were overbought here. What happened after that? Go ahead. Somebody, fill in. Jason. Something overbought. Let me just fit. This is simple. I'm going to actually print for myself. I'm going to do an Idiot's Guide to Technical Trading. Hey, that'd be a great book, right? Somebody want to collaborate with me? I'll split the profits. An Idiot's Guide to Technical Trading. Because you get a lot of these Idiot's Guide to fixing computers, blah, 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 right? On the stores. Has anyone ever seen a book? This is a fantastic idea. An Idiot's Guide to Technical Trading. For complete layman. Wouldn't that be fun? Anyone want to collaborate with me? Yes or no?
Hey, I'm in, Frank.
Jason, you're mine, man. We'll do it. Seriously. We'll do a 20-page little book. We'll send it. We get it e-printed by Amazon. I swear to God, I'm going to check it tonight. You check it on your end too. An idiot's guide to technical trading. So
I hate to say it, but I'll be the first buyer too.
I will be the first buyer too, okay? Seriously. Now, this is fantastic. So anyway, so things get overbought on a generally bullish market. What happens after that? You can see it here. So just fill in the word. It's one word. Come on, guys. Don't be shy. Just say it. Nobody? Okay, I don't have all night to waste. I got to drink, I have a nice drink on the patio waiting, I got to go. It moves sideways. So overbought conditions can remain, overbought conditions, OB conditions can remain overbought for multiple weeks. This is a weekly chart, not one day. We might be in one of those zones because I do believe in my heart and in my estimation that the Trump team is going to deliver on some real concrete tax reform proposals. It doesn't mean I love everything that he does. Sometimes he's very idiotic, like I said in my last video cast, but that's not going to derail the overall picture of what the Trump administration is trying to do, which is fantastic. So overbought conditions can remain overbought for weeks. Now I'll show you one other chart which says it might be. Now what does weeks mean? They're not going to be fluctuations during the day? Of course not. It means we will have volatility. But if you look at it on the bigger picture, it says the market will continue to go higher. I have a weird feeling that in between some quick pullbacks, we're going to literally keep on going higher till December. I have a weird feeling. I hate saying this because I never want to get like really bullish. But I have a weird feeling, and we're going to show this on the charts in a second. The magic of technical, my version of technical analysis. So what this is telling us, and please look at it, this type of complete sharp move up on a weekly on the markets, right? Look at the stochastics. This is telling you the truth. This is all lying to you. Prices lie to you. Internal stone. This internal, the way it gapped up, like straight up. Like if the big money said, that's it. Market's going higher. So we got to get in really hard. We got to get in really hard. We have to get in really hard. Fast. Before the lemmings coming in. Before the small traders and the retail guys start getting excited. We got to get in really hard. Well, that's what this is all about. The sharp move on the full stochastics. This is the full stochastics. Not short, not slow. Full stochastics. Showing you the momentum of the underlying big money coming into the market. Money flows. And this went up. It went up. It stayed overbought for weeks. From November, from end of October of last year. Let's not forget. All the way through to, if you guys remember, late January, early February. Late January to early February. Have you ever thought, and I sometimes post this, have we in our lives as humans, are we genetically programmed to think negative? Oh my God, that's going to go wrong. We never really want to think what might go right. Have you ever thought what might go right? I'll tell you what's going to go right. The economic tax reform plan is going to go right. I don't care what the hardcore Democrats, what they say, and I'm not like a partisan, like a hardcore guy. I'm a hardcore Republican. I'm not like a fanatic, okay? When I don't like something, I say it. My good friends like golf and stuff know that too, okay? So a true patriot doesn't have to subscribe to everything that's coming out from the top, but believes in the bigger idea. The bigger idea is they're going to do it. And not just that, the global economy is moving forward. So saying all that, can't we move sideways for months going into the first part of the year when the big tax selling comes in? Absolutely. Are we prepared for it? I don't think we are. Because every time the market goes higher, we keep on like croaking, like, oh my God, where's the pullback coming? Where's the retracement? When's the 10% drop? That's all we keep on thinking. We never think that the market can actually go up another 500 points from here, another 200 points from here. How about another 1,000 points from here? Now, is it individual segmentation of different sectors? What if the energy sector really takes off? What if EOG, one of our favorite stocks that we trade, I haven't even mentioned it lately, goes up from the 90s into the 120 levels? What if the Saudis push up oil? The Saudis and the Russian live, eat, and sleep on the same bed, okay? When it comes to oil. The Saudi king was in Moscow. I don't know if you guys know this, like 2 weeks ago. He frigging had planes flying in his own food every day. That's what these big shots do, I guess, right? They are so big shots, they make our big shots look like paupers, beggars. And literally, he had one plane flying in his special food. He's 82 years old, so he probably eats like, whatever he eats. First royal visit of a Saudi king to Russia. For what? To eat, what do you call it? The Russian, caviar and drink. He doesn't drink. No, to cut deals on oil. Okay? So oil will most probably go to 60. So in that case, why can't we go up? One more blast. Whichever the case, look at this. This is what I wanted to say. And this is predictive theory, all right? You can move sideways for a whole bunch of months. You can move sideways for a whole bunch of weeks. In my case, I'm thinking we can move sideways for a whole bunch of weeks. In between, you will get these little dips where the market will fall about 100 points or whatever. But each of these consolidation channels, as long as they're above the 20, 34, and the 50-day moving average, well, 50-day moving average is 100 points below where we are right now. Almost 100 points. I'm sorry, 200 points. That's a 1,200 point drop in the Dow Jones. I highly doubt it unless we are in a full-scale semi-nuclear combat, which we're not getting into with North Korea. Can we get into a firefight with North Korea? Yes. That itself will drop the market to the 24, 28 level, which is 100 points. Okay, that's 600 points on the Dow within a flash of your eye, which is 2 days. Okay, if we start bombing the North Korean electrical grid and cut off their power supply, we will drop 600 points within seconds. This is the danger part about trading. All this can happen in the middle of the night when we have no ability to trade. So do not go nuts on any positions. Keep moderate positions and keep on taking the profits. If you're going to have a long-term position on certain powerful swing stocks, keep in mind that North Korea, Iran, tweets out of good old my friend Donald, because we like to talk in the middle of the night, myself included, right? We like to yell at people middle of the night, right? Well, can disrupt the markets temporarily. Otherwise, barring all that type of scenario, we are good to go. 5-week moving average moving nice. 20-day moving, 20-week moving average still kind of flattish. I'd like to see it move up a little bit, curl up. That's it. Now, last thing that I'll do is I'm going to draw some lines right in front of you guys. So this is good. This is good. This is the weekly picture. So we have an eye on what's going on with, overall. Is we're going to draw a couple of lines. And believe me, I like to keep it simple. So first of all, this is the line. This line is at 25.24. That's 26 points below where we are. So so we don't want to necessarily break that. That means if we fall 120 points on the Dow, chances are we are going to basically break this nice uptrend that we are seeing on the 5-week moving average. Everyone see that clearly, what I'm showing?
Yes.
Okay. So that is your intermediate term sort of picture. So when I'm trading the S&P 500, I am looking at this thing very carefully, and I'm not buying them weeks and weeks out. I like to buy the S&P 500 roughly a week or 2 weeks out. That's it. Because I don't know what's going to happen 2 weeks after. I'll be the first one to say it. All right. So saying all that, this is the white channel. And just like I said, we get into a firefight with North Korea, or we get into a firefight with Iran because he's going to rescind some of their nuclear certificates and stuff. I don't want to even go there. And I think the Iranians, the Iranian government, not the Iranian people. I have Iranian friends in New York, New Jersey, great guys. Expedia's chairman is an Iranian American. He's one of the best minds ever. The guy who's building the Hyperloop is an Iranian American. There you go. Because all the best minds ran away from the country, right? That's pretty much what they did, honestly. So bottom line is that we get into a firefight with Iranians, and they're not kids, all right? They're like the hardcore. They're really hardcore. You know, North Koreans might like kimchi, but these Iranians will fight us like to tooth and nail. And and we don't want to get into like any sort of major military conflict with Iran. I'll tell you that, because they'll bomb the heck out of Saudi Arabia. Best case to buy at that point, if ever that happens, which I never wish, is oil, because oil is going to spike up $30 in 2 seconds. Because oil supply in the Strait of Hormuz, which is the narrowest channel in the Persian Gulf, you guys know that, many of you know that, will be cut off. Iranians will completely block that off. No oil coming out of the Middle East. And by the way, just so you know, we still depend for 40% of our oil imports from the Gulf, despite all the oil that we have and that we get from Canada. So that'll be the best play. Anyway, that's not what we're talking about right now. So this type of scenario will happen, 600 points, if that happens. In the meantime, we will have major support at around 25.28 on the S&P 500, not the E-minis. So we're talking about 24 points times 6 is what? So you're talking about, to be exact, about 144 points on the Dow. Don't freak out. If this chart doesn't change, we're going higher. As long as the 5-week moving average keeps on doing what it's doing. It has been support. How many times? 1, 2, 3. 3 times since late August. It has been support. The 20-day moving average has been a major support multiple times. So 24.67, if we fall there, that's about 100 points, right? 100 points, a little less than that. That's 600 points. Can we get there? Might happen. But hey, you have the best friend in the world called Clueless A Trading. I'll let you guys know what to do, when to do. All you have to do is act. If we see a significant trend change, not just a minor trend change, you can scalp during the day. Do not hold shorts overnight in this type of market, because it will kill you. And the shorts know that very well. And in fact, they don't know that. That's why they keep on getting killed every day. Now, the longer term picture. 1 second. So far, everything I'm talking about is making sense, or am I just talking to myself?
I'm with you.
Makes absolute sense.
Okay, good. Because I want you guys to sort of not necessarily think alike like me, but at least understand the basis for why so many of my charts are so correct. Now, we all have to be better at trade management. That's one thing I keep on fighting every single day. But aside from that, when it comes to these days, if you notice, I like buying time on multiple stocks. In other words, that if I'm going to buy October 20th, I might be moving into November, but I still believe there's going to be a little bit of that quick move down in mid-October, so I'm not recommending November's yet. But I will, once we get that little dip, if we do, which I know we'll do. So that's it. Let me see here. That's a duplicate drawing. Tough to draw this one. Hold on. Technical analysis is not pure science. It has a lot to do with like how you look at individual supply, demand points, all that stuff, channels. So here it is. This is your answer, what we're doing. So the first level of where we're going, where we're going to hit major resistance on a swing trade going into the end of October, in my opinion, is 25.84. That's 34 points from here, or it might be this week. I don't know. Okay. So 25.84 is 34 points. 34 times 6 is what? 34 times 6 is the Dow Jones, is 200 more points from here, which looks very feasible. Now, how to arrive at that? Was I tried to draw a line which touches the upper end of each of these moves. And that's where I came through there. What's the next level of attraction for the market? Woo! That almost takes my breath away. 2637. So 2637 minus where we closed at right now, which is 2550, is 87 S&P points, right? So I'm going to write this down. So from here, this is the next level, right? And this is a weekly chart, so we're talking about quite a bit. So the first scenario is we go up, what did I say, 200 points, right? Roughly. The next scenario is 87 S&P points times 6 is 500. Second scenario is 522 points. The third scenario on the top of the weekly chart, I know this sounds crazy to a lot of people, but this is the crap that is going to happen. 2666. Oh, wow. I just found the combination. What was the bottom of the stock market on March 9, 2009? And I've mentioned this.
666.
Thank you. I think 266. We just hit it, Johnny. 2666 is going to be the end of the final leg of the bull market before we get into a real deep correction. Wow. Because it matches. Numbers do talk, believe me. They have a weird way of doing it. Okay, 266 minus 2550, where we closed that today, is 116 points times the 6 is 619 points. Oops. The third scenario, which is here, is 696 points, which might not happen till the end of the year. But if you look, everyone clear with these numbers?
Yes.
These are the bullish projections, minding anything can change. I'm just saying. Otherwise, we know what the other numbers are. We have a major support at 2524, which is 26 points below where we are right now, multiplied by 5 or 6 is around 130, 140 points. Anything below that, we get a beautiful short all the way down. Can it happen? Absolutely. Absolutely. Given what I'm seeing on the underlying stochastics, unless these lines buckle, we are going to move on a sideways trajectory. Why do I think these lines might not buckle? Just by looking at the shape of the way this is moving. You see what I'm saying? You don't have to be a technical analyst or whatever. Just look at the shapes. These ones just kind of rounded up like this. This one seems to be going sideways on the start of a movement similar to what happened here. Now, what happened here was last year, I'll finish on this note, was between late October or mid-October. We went all the way up to early December, end of November. Then we had a pullback. I remember I still have my tweets out there and I still have my video cast. They were like, that's it, Santa's gone, he's not coming back, we are all atheists. Like, I don't know, whatever they were saying, crazy stuff. Boom, Santa came back with a vengeance. Right beginning of December. Okay? Then the market kept on going all the way up to, read the thing here. The market kept on going all the way up to, what's the date at the bottom? Come on, guys, give me the date at the bottom. I'm showing you. Market hit
February
top.
27.
That's right. And from February 27 to March 28, that's a month. That seems eternity for traders because we're always looking short term, all of us included, right? We did not hit a bottom till April 10th, which was right, during during tax time. So if this scenario happens, just get prepared for it. If this scenario happens, we are good to go from a minor dip in mid-October all the way straight up till the end of the year. straight up meaning like from a swing perspective. Last thing I'll tell you, we always seem to be in our heads, and myself included, every morning that I wake up, waiting for some sort of like calamity or some sort of pullback and our position's not working and the market's not going higher. Question you have to go to bed with tonight and say, if this type of scenario happens, which I have shown you on a technical basis, are we prepared to wake up and say, that doesn't matter what those minor dips are, I'm staying long for the remainder part of the year. It's only 80 some days, right, left for Christmas? So think like that. And I have a hard time like thinking like that too, even though I'm tactically very bullish, because we have positions open. Some positions are a little bit light. Some of them go through the roof. But as long as we stick to the big momentum trades like the Nvidias, like the Teslas, like the Amazon, you think Amazon's going to lose money during holiday season? I don't think so. Is Amazon going to dip a little bit because starting in November or something, they're going to tax? They're going to have a tax on every product that we buy in all states. Maybe. That's my final note. Any other quick questions before we leave? Tom.
Yes.
Any quick questions you might have that I can answer quickly?
No.
I appreciate that, sir. I appreciate your politeness, and I hope that you join us as a member. There's a great group of people here. One of the people that you might want to connect to so you understand the way I think and I work and what my performance has been, which of course is shown directly, is my good friend Corey and golf. Jason Fox is too much of a engineering wizard. Jason, what state are you in?
Just flew into New Orleans.
No, I know you're in frigging New Orleans, but where do you live?
Colorado, Denver.
Okay. Who's from Minneapolis, Minnesota, by the way? I know we have members from Minnesota. That's what I was asking because Tom's from there. So okay. So in the meantime, Mike, Shawnee, Sue, Tom, and everyone else is going to hear this. I think this was very helpful. It's helpful to me when I discuss this with you guys. And guys, last thing I'll tell you. You got to be quick when you have some large profits on these fast moving trades. Got to keep on looking at my charts. The more you look at it, like this new gentleman who came in, Parvez, who's in Texas, he had to leave. Like he said, he gets it. Some people get it quicker. Some people get it a bit later. It doesn't matter as long as you get it. Because I'm going to keep on doing my job. Do yours. On that note, guys, God bless. Have a great evening. And let's, we'll connect tomorrow. And let's have a great month. All right? And a great year. And
all right. Thanks, Frank.
And only one last statement. It doesn't matter what happened before. It's what's coming ahead of you as traders that's going to make you happy. And I mean that because I've been there. It doesn't matter what happened the last couple of weeks. It doesn't matter whether you missed on a couple of trades and something didn't work out and Alta Beauty is not working out. I don't have a huge position on that anyway, but still, I want it to work out. Still on a loss on that. But it doesn't matter with all that. It's what's ahead of you, and you got to be flexible. And those things will come naturally to you as long as you keep on tracking my charts and knowing when to hit the gas, the pedal to the metal on certain stocks when they're moving, like the Teslas of the world or Nvidias of the world or Alibabas of the world, and never fall in love with the stock. It's not worth it. They're a bunch of numbers, and they don't give a hoot about who's making money or not. So just stick to them, look at them as just material objects, which are numbers. That's the reason why the charts are so powerful. Thank you very much for being here, and we'll see you guys tomorrow.